afternoon, ladies and gentlemen. As she's laid down, this is a workshop, and it is a workshop in workshop because we have two panels which are going to sequence one after the other. Uh, my role is just, I think, given the fact that we are trying to search for a black cat in a dark room kind of situation, I think my role here on this topic is largely to keep the time. Yeah, so let's see what is the context. We know that in July 2022 we have launched the IIBX as a major step to develop the gold markets in India. At that time, it was envisioned that we would probably also set up a gold spot exchange for the domestic part, but that nothing has taken off for a long time. And the recent regulatory change has allowed something to take shape right now. That's the context in which we are. So the workshop is expected to spell out what the plans are and what the challenges are, where the market potential is. Therefore, without really further wasting time, I just quickly go back to the panelists to really start with their introductory remarks on what is the viability of a gold spot exchange in India, and what do they think are the key steps required to be rolled out to get to a point where we can confidently say that we have a marketplace right now. So let me start with the Mr. Ashok Gautam of IIBX, given the fact that he's already up and running one exchange, and therefore probably he has some good lessons for the domestic spot exchange. Let's listen to Mr. Ashok.
Sorry, I just wanted to understand the context. I'm going to answer in the context of what we have done at IIBX.
Yes, yes.
What lessons we can have for the spot exchange.
Yes.
Thank you. Good afternoon, everyone, and thank you, IGPC IIMA, for giving me this opportunity to be here amongst all the bullion market professionals, academicians, and those who do human service to the gold and gold market. It's exactly a year now since I joined IIBX, and it has been quite an eventful year. Though my regulator is sitting here, I don't want to sound like, but it has been a journey which is, there were think tanks, Niti Aayog was there, then IGPC had their own papers which had come out, and then IFSC really ensured that various bullion regulations and other things are in place, and that's when IIBX came in being. So obviously various challenges in the context of IFSC, GIFT IFSC as a place, because this happened to be outside the DTA area. So it's sort of India International Bullion Exchange what we are talking about. So the first challenge was that what are we targeting? Who are our target audience? So anything which we try to do, we figure out, we want to know who is our target audience, and then we keep on expanding our target audience as we get into a saturation mode of that target audience. So essentially the target audience initially became that, okay, there is something called qualified jewelers, which DGFT enabled, and then IFSCA set various rules around it, and we started, thanks to our promoters, 3 of them happen to be the principal exchanges operating in the domestic area, and through their reach with the gold and bullion community, we started getting applications. Essentially was, of course, the applications were coming, and the qualified jeweler status was being given provisionally, and later on it was officially given by the IFSCA after scrutiny and all. So the question was that, okay, qualified jeweler is there, then how does it work? Because can the dollar flow happen from India area to the GIFT IFSC area? So that became the first point. And there a lot of discussions took place between the two regulators, and ultimately we had a circular coming from Reserve Bank of India in May last year, whereby they enabled the dollar flow to happen to IIBX. But that was the regulator's circular. So still the challenges remain. I can share with this audience. Only a few private sector banks have actually issued the internal policy and guidelines on the basis of those RBI circular. There are a large number of public sector banks have still not issued any policy, though we have had discussions through FEDI and we have met many of these public sector banks. So when we are talking about, what kind of road we are creating, a 8-lane highway we are creating, but then 8-lane highway has to also have a traffic. And for that traffic, we need to have enablement. So we have created a highway, then you have to have linkages, the roads which are leading to the highway. So the roads which are leading to the highway, the first point was, so okay, that is done. But still, so that has started moving. That is point number 1. Now the point number 2 was that what is the role of the domestic Indian banks vis-a-vis what we are trying to do at IIBX? And there, as you all are aware, there are different views. So regulator has some views, but ultimately they came up with a circular whereby they enabled the IBUs of domestic Indian banks, if they so apply post their board resolutions and all, to become the professional clearing members. So okay, another road connected, whereby we have now one bank already and another bank is in the pipeline, where they have taken the necessary approvals of the board and the RBI and IFSCA to come as a professional clearing member. So that is the second part of the road. Now the third part of the road is the customers for whom the qualified jewelers, do they find any value in coming to the IIBX? Now this is a very important point which we must address. So look at it. Today the highest duty anybody who wants to take gold from IIBX, he pays in the country, which is 15%. And there are various duty slabs from 0 to 14.35% for gold coming in various shapes and forms under various agreements from various different jurisdictions globally, and that all is available in the DT area. So that means the gold which comes there, it comes in different. Again, how do we get into the rationalization? So okay, one point which you must have heard today, our chairperson speaking, is that SEPA is something which we all are trying that should happen. So another road, the ICE gate was not there, so the customs portal was not there. So that is another road connecting to that 8-lane highway, so that okay, something can start happening. So that connectivity is happening.
If I can interject for a moment
sure, sir.
here, the SEPA has not really taken off the way we expected that to take off.
Sir, I can give you answer. This will take off. Take my word. This is going to take off. The only thing is, what is the advantage in SEPA? SEPA advantage is $18 to the international price. If the Indian market, the gold is available at more than the $18 discount, SEPA will not take off. So it's just a simple commercial market situation. You can have any agreement, but when we talk to the jewelers and all, they say, Mr. Gautam, don't worry, we will come to you in trove. We'll come to you the moment market is in parity. So you don't have to come and ask us. I said, fine, but okay, let's be in readiness. Let's enable you. Let's enable the dollar flow. Let's enable whatever, we are trying to do, same day delivery, even 4-hour delivery, even T+30, which we are trying to do so many things. So they say, we are commercial entities. The moment we see 1 paisa advantage, we'll come to you. So it's a new exchange which we all are trying to promote, but we have not given any concession, right? No concession given and no mandate. There is no mandate that you have to come through it. So we have to then stand on our own feet, and this is the lesson for other exchanges on domestic that they're trying to do on spot basis, that what type of product we are talking about which helps the addressable market. If today, so there are multiple addressable market. I am talking only about the QJs. I am not getting into other addressable market which we are targeting. But on the qualified jewelers, when we are talking about that addressable market, how will they come to us is what we are trying to do. We are trying to get those lanes. Again, finally, will they come is the question you asked about SEPA, and that is relevant for the at 15% duty also, whether they will come to me, is again the question. If they find 1 paisa economic value, they will come to me. I always believe any financial instrument which we try to create, it will succeed only if it has economic value. Otherwise, it will have a we will all launch it, we'll try to push it, we'll say this is good, please do it. But that is something where we'll have to figure it out. Now coming to what the lessons are there, again, so the domestic spot exchanges which are coming up, or the segments which are within the exchanges, again is the question, so we want to have a gold spot exchange, fine. What are we trying to do? So again, I believe we saw that there is a huge impetus which is happening on the digital gold piece side. Can we, replace that whole digital gold piece which was unregulated, and there was SEBI had said, okay, that cannot be done. Can we also work on some kind of tokenize things against those gold pieces which are there? And on the, and see, if we look at the folio of all the three exchanges, they will be tremendous. So that financial, when they go for buying physical gold, I'm not against physical gold or any, the government's objective is that gold has to move to a digital form and all. So, but if they find this attractive, so can it be there? Obviously, GST question is a tiger or elephant in the room which has to be addressed. But this is something which they will have to figure it out. Ultimately, who is their target? What are they trying to do? Or do we serve that target? And also, not only this, they will have to also work on, once they are having that EGR, can they at the click of a button give the EGR to titans of the world, or the Tangamalis of the world, that this much gold is credited, please give me the equivalent jewelry plus take the making charges. So these are the things which we'll have to all figure it out, what we are trying to do on the exchange side. I think opening comment,
Yeah.
I'll leave it here, because I'll keep on speaking. Thank you.
Thank you, Ashok, for the wonderful remarks about his journey, how to cut the rod and build feeder routes there, and laying out even some lessons for the domestic spot exchange. With that, let's check with the exchanges themselves to see their plans reflect these thoughts, or they have something else in mind. I would probably start with Shivanshu and then go to Gaurav and then go to Ranjit. I'll start with Shivanshu because I think he's the veteran in gold in India at this point. Maybe Ranjit is the other, and then Gaurav is sandwiched between the two. So, Shivanshu, please.
Sure. So I understand the query is. The query is, sorry, thanks. That how viable do we see the EGR as a product in domestic side, either as a segment or?
Yes.
Yes, thanks. So I think we have sort of discovered the products in an inverted fashion in the commodities segment. We first had the futures, then we had options, indices, and now we are moving towards spot. But having said that, even if the cart was put before the horse, the carts have all become very liquid. They've become established products by themselves in over 2 decades or so now. Futures are instruments used by all the leading bullion traders and jewelers, listed or otherwise, for carrying out their hedging activities. Now they're even delivering onto the exchange platform. So as a hedging instrument, futures, and that too as an offset hedging instrument, no profit, no loss, they are the instruments. As far as options are concerned, they have also gathered a lot of liquidity now. We are seeing close to 2,500 crores per day of volumes in options in gold. Silver options are also liquid. There, I think, over the past few years, awareness has been built that you can use them in a variety of ways. You can actually make profits while controlling your downside, while limiting your downside by payment of a premium, ensuring your fabrication margins are with you. At the same time, you can profit on the other side. So this, of course, we are seeding these sort of hedging strategies in jewelers. It's not a 1 day or a 1 year task. This will go on. But we are seeing the scale up happening in options as well. Now coming to the next leg, which is the EGR, definitely all the exchanges and depositories have been part of the working group, SEBI's working group, in designing this product. On paper and even otherwise, this product has a lot of potential. It can actually further bolster gold as an asset class. Just like we saw in the previous presentation, that even at the rural level, there is an appetite for gold, which has always been there. But at the same time, this gives a sort of a very organized shape to it being used in a variety of ways, not only for holding, accumulating, and maintaining, but also as part of mutual funds. You know, it can become a handy tool for them, as well as for the ETFs. It carries all the traits of being traceable, which the government wants, and you know exactly who is holding what. It can be exchanged very conveniently. And the products that we as an exchange have prior to the EGR, which are of retail nature, that they have done well. Like the gold petal 1 gram futures contract, people have used it for delivery. 1 kilogram silver contract, again, people have used it for delivery. At the same time, we are seeing organized jewelers do well. So this whole segment is going through a transformation, and it's moving from unorganized to organized. So that it favors, it augurs well for the EGR. But then you see, there are certain issues, you know, while we would launch it once the technology transition is complete at our end, but the GST issue has to be tackled for it to be a success. Offset has to be provided at the deposit level, and that is very important. There have been a few regulatory changes, like the capital gains in this budget on the conversion not being there is a welcome one. And I think the most important part is that wherever you, okay, we can launch it as a segment or as an exchange, but then wherever there is a spot exchange globally, especially Shanghai, both the futures and the spot products move hand in hand. They move in tandem. So if we have such a liquid futures platform, so we thought that we should launch it as a segment so that players can take advantage and use it similarly. So in Shanghai, you see that more volumes happen because of the spot in the deferred contract, and vice versa. They support each other. Of course, in Shanghai, there is a mandate to do the first transaction on the exchange by law, and Mr. Ashok would be so happy, and so would I, from the IIBX hat, if that happens. Even so, I think EGR has a lot of potential, and given that we root out these type of GST-related issues, it will get established over the long term, and digital gold is also an example. So there are so many different examples which point in this direction. Thank you.
Thank you, Shivanshu. I think Shivanshu expresses optimism in the fact that they could actually build a derivative market, and successfully so. And now it is about pivoting back to the spot. In fact, finances, so many parallels where spot was not there, but you had derivatives and then built back a spot. But let's check with Gaurav. The road that we are going to cut is something very different. Already one highway is cut, some feeder roads are built. We are now going to get another highway. Are there enough feeder roads and the same optimism that Shivanshu expressed? Do you see that, Gaurav, in the spot exchange?
See, as NAC, we are very positive about the EGR product as such, the offering. First of all, let me thank IGPC for inviting us. See, there are different products through which investors invest into gold, either as an investment or for their own personal needs, maybe jewelry or whichever way it is. So one of the products is the gold ETF, which is being traded on the exchange platform, and we have a history and background of that product picking up, and because that product is largely for retail participation, and we've seen good traction in the gold ETF, but the ETF as a product has its own challenges in terms of the carry part of it, so that is, there is always a carry which is always there on the ETF front. So, someone who's investing into ETF, he can't correlate with the prices as such. But the product being very simple, that you can invest as one unit, has, got traction. So from that point of view, yes, EGR is a very good product. Then RBI themselves issued sovereign gold bond. So the reason why I'm saying is, one, the product in an electronic form. Second, those products being offered by the exchange platform. Are they building traction? Is there an interest, or there are no interest? Sovereign gold bond, if you see, there are almost close to 30-35 tranches which have been done. And there is huge traction whenever the sovereign gold bonds are being issued. One, primarily because there is a 2.5% interest which is there on the sovereign gold bond. But the larger issue there it is because it is being issued in multiple tranches, the secondary market liquidity is not there. So someone who may have got the price of say 5,000 rupees and those bonds are being issued for 8 years, unless until the bond as a nature, the spot price, the bond price may only converge into the spot price only when it is closer to the tenure of the bond. So that is another challenge with the sovereign gold bond. But EGR is almost trying to solve all these problems put together, which is of the digital gold, which is the space which is unregulated, which Shivanshu also mentioned, with SEBI also disallowing brokers not to promote digital gold. That will definitely give the impetus. But there are 3 stages to this. One, definitely a guy who comes, who's holding a physical gold, comes to the vault manager, converts into the EGR form from depository. The second part is those EGRs get traded onto the exchange platform in whichever unit it is. It could be a 1 gram unit, it could be a 100 gram unit based on the requirement of the market. And the third part is if I need, a physical, see, finally, end of the day, you don't, you need a physical gold, right? You are in, see, the trend or the, investor's psyche is that finally, end of the day, he needs a physical gold, maybe for jewelry, for whichever way it is. So there is provision which is being done that you can go convert this EGR into a physical form. None of the exchanges at this point of time, because BSE is the only one who has launched it, have gone through this complete cycle. So I don't know how seamlessly this would be done, because it should be very convenient for the end investor. Because finally, as Ashok was mentioning, I would ideally want my EGR if I can go to a Titan shop or a Reliance Jewel and say, I am holding this, EGR. Can you just convert into a price and then give me a jewelry, whichever it is. So that is how ideally we may have to evolve, but the overall structure or the framework is already being decided. So I always feel then there is, one is the platform where the exchange comes into role. So NSE being one of the largest exchanges, we have the technology in place to facilitate. There is investors who are already there. There are investors who are FPIs, there are ETF, there are mutual funds. So there are players, the financial players which are already there. Then there are physical players who understand this product, and unless until it makes an economic sense for them, they will not come to this platform. So that is another. The other one is the regulatory framework which already is being put based on the suggestions and onboarding suggestions for each and every market participant. And third, there are definitely challenges in terms of the GST, which Shivanshu has as well, I think it's well known. But the other clarification also is in terms of, STT, CTT, whether those should be charged, not charged. Because in gold ETF as well as in sovereign gold bond, there are no STTs which are involved. So if clarifications come, which I'm sure those clarifications would be required for this product to kick in. We as NSE had, because the SEBI regulation or the framework gave us 2 options. One was to launch it as an additional segment or launch it as a separate exchange. So we prima facie have, are working with IBJA on this and looking at, if we can set up a separate exchange, because there are 2 segments to it. One is the B2B and the other is B2C. So that is how we are looking at this EGR framework at large. So we are very positive, knowing that there is an appetite for gold in India from a customer point of view. But the market is fragmented, the product streams are, there are so many options for an investor, you may have to make it very relevant for them to invest into EGRs.
Thank you, Gaurav. I think the sense that we get from both Shivanshu and Gaurav is that there is already exposure through derivatives, there is physical demand, there is knowledge, there is facilitating regulation. Therefore, it will take off. But we know that liquidity is a self-fulfilling prophecy. If it is there, it is there. If it is not there, it's not there. Quite often, exchanges struggle to build liquidity. So therefore, let's go back and learn from Ranjit, who is probably a step ahead of NSE at this point of time. Sorry, BSE at this point in time. And therefore, let's ask him or figure out what are their plans to generate liquidity in physical or margin products or leasing products. What kind of products that you would think is ideal for the market?
Thank you. At the outset, I'd like to thank IGPC for giving this opportunity to talk on EGR product which we have launched, and we experienced all the three tranches which Mr. Kapoor has mentioned: conversion from physical gold to EGR, trading on EGR get traded on the exchange, and EGR to physical gold also. And I hope I'll give you the brief what we are thinking as a BSE planning to launch, working on different products. I think the session after lunch is a quite difficult session, and I hope and we hope that we'll keep you awake during this session and more interesting. Let's talk about BSE. As Gaurav has already mentioned that SEBI has permitted to either to go for an exchange or to launch as a different segment. As a BSE management decided that we go as a segment, and we launched this on last year Diwali on 24th of October. We like to thank to our regulator, SEBI, for giving us a permission in the faster manner. We got it in 1 day permission, to be honest with you. We got it on Friday, we got a permission. On Monday, we launched the EGR. On Saturday, we did a conversion of physical gold to EGRs. About the experience, the time taken for conversion of EGRs almost took me 8 hours to convert 3 kgs. Because since the product was new, second, the system was new, third hiccups was coming across since the vault managers were not well versed with the system which is provided by the depositories, and not by the depository participants also not well, because it has to be three-way process. Depository participant, client request to depository participants, from depository participant will go to vault managers, from vault managers it will go to respective depository, either NSDL, CDSL. So it took me the whole day, I was coordinating with them. It's a quite learning experience because new system and everything, lot of hiccups was there. So it went smoothly. On Monday we got launched on 24th of October. And about the product, as Gaurav and Mr. Ashok Gautam has already mentioned that we should tie up with all the big jewelers where they'll accept EGR. I'll like to thank them for giving me an ideas, throwing an ideas to me, what BSE can do it. And the second thing is, we in equity, if you have heard about equity cash market, we have a SLB, it's called Securities Lending and Borrowing Market. So we want to work on similar platform for EGR, where the EGR will be lent or can be borrowed by the jewelers. The lenders can be any investors who's holding a gold as an investment, doesn't want to sell it back, can lend his gold at the interest. See, SGB got promoted very well, or got interest from the retail investor because of the interest factor. In spite, in buying the tranches were trading at lower, if you see the previous tranches were trading at lower prices compared to the current prices of, as because this is a bond market, as Mr. Kapoor has mentioned. So what we is planning is, one is the SLB platform, which we are EGR, we can call it EGR lending and borrowing platform, where the currently if any jeweler wants to increase his stocks, he has to either invest his own money, either he has to borrow from the bank. If I borrow from a bank, approximately the cost of borrowing will be around 12% on average. I'm taking out, not going on the higher side, go to 15-18% also, depend on bank to bank and customer to customers also. But gold EGR lending can be around 3.5 to 4%, as similar to gold metal loan is currently processed. So as an investor, I'm getting 3.5 to 4%, and the person who's borrowing from me, instead of 12%, he's getting the gold at 4%. So it's win-win to customer, to who's lending, and in win-win to borrower because he's getting at lower interest rate compared to banking sectors also. Then we also launched the 3 products which BSE has launched in October. One was the product where the deposit unit is 1 gram, but the trading unit is 100 milligram. So as low as 510 to 520 rupees, I can do the investment in EGR. So if you want to promote this product as a SIP product, the way the lot of jewelers, I'm not against jeweler people, but a lot of jewelers people do that investment, like you do investment for 10 months, 11 months. So we want to promote this as a SIP product, which we do. SIP is doing very well in equity cash market. The same way we can do it in equity gold EGR product also. And third thing is we also, you can keep this gold EGR as a collateral. SEBI has permitted to accept this gold EGR as a collateral with a 20% haircut. So that means you get 80% whatever the EGR you'll do as a collateral part. These are the thoughts which we are thinking of. The main showstopper currently right now, as Mr. Gautam, Mr. Kapoor has mentioned that, and Mr. Mehta also mentioned that GST part. See, as a depositor, any gold which I get imported or anything, I have to pay a duty plus GST part. So when I convert my goods to service, it's not service, it's a securities. Means EGR is termed as a securities, I cannot add a GST to it. Until unless GST conversion from EGR to physical doesn't happen, I cannot charge the GST to the respective beneficiary owners. So the beneficiary owner can convert in a month, maybe 2 months, 6 months or a year or done. Until unless it doesn't convert, I cannot charge him and give it back to the main depositors. So we have given representation to Ministry of Finance as well as to SEBI that work out something mechanism where depositor get a credit, kind of a credit note, where he can use as a paying his GST terms. So we working on it. We hope soon we'll get to learn a lot of things from Ministry of Finance, that what will be the GST part, how the GST will work out on the EGR part only. And STT and stamp duty also we are awaiting clarity. I think once we get, we are good to go. And we, as you said, that we already launched it. The only thing is taxation part, which is a hurdle to us. Thank you.
Thank you, Ranjit. I think he has, made us clear in terms of what BSE has taken steps, not just EJR, but even an SLB based on EJR. So there are several steps ahead of what we think they were at. Now let me go back to Mr. Reina and check with him as to what he would aspire the exchanges to do.
Thank you. Okay, I mean, I'm a bit confused here. I mean, it's we are talking about. Sorry, guys. I mean, I'm always on the other side of it. On my right is all the exchanges sitting here, and the spot exchange discussion I think started 2-3 years back. I mean, and the main purpose was to have one India price. No, we already have a one India price. So now we have a spot exchange. Then we talked about EGR getting exchange in different locations. Then we had different products like 1 gram, 2 grams. So let me ask this question. I mean, spot exchange, are we really talking about spot or we are talking about a deferred spot? So is it a T+2 contract or is something else? This is a basic question that needs to be answered, because the way things are going on, like digital coming on the spot exchange, it cannot happen. I mean, it's like if someone is buying a rupee of gold every day, in 2 days' time, he cannot buy, a redeemable gold. So for me, the spot exchange is an exchange where the physical gets traded for T+2, period. I mean, there is no going beyond that. That's part one. The part two, do we really require a spot exchange? I think the answer lies with the government. If they look at transparency, I think transparency is still today available, because 90% of the gold is imported by the bank. They are the first seller. And the other refineries are the second seller, and again, these are on the books, it can be, cross-checked. So transparency-wise, everything is transparent. The second leg, sale onward, is something that is questionable, and I'm not going to that. The third part is, what kind of a product are we looking at? Are we looking at a kilogram? Are we looking at 100 gram? Are we looking at 1 gram, 2 gram? Like Ranjit said that, it can be traded in 100 milligram, but it's a 1 gram contract. So how many products are we going to launch? And mind you, this is not a future exchange, we are talking about spot exchange. So these are the clarity that is required. Secondly, Today, if you see, and leave apart the regulatory part, spot exchange, every trader is running a spot exchange. I mean, he is having a vault in all the locations in India. He has a screen in his office where every jeweler, whether he wants to buy 50 gram, 100 gram, is going onto that screen. So let's assume that that screen is an exchange. So what are we achieving differently having a spot exchange? From the trading perspective, I say that it's a cost to me. Should I be on that particular platform to trade my gold? And it's a huge cost. And then you will ask me to have my gold being in 7 vaults. Again, that is a cost to me. Today, in principle, if you see, the price are same everywhere across India. It's how the traders define their margin. And there is a movement cost that will get added to it. Today, MCX has a Ahmedabad location where everything gets delivered. So it's a one price that everyone trades, but delivery is at Ahmedabad. He wants to move from Ahmedabad to Chennai, he has to pay that cost. So, I'm the last 2-3 years, spot exchange, I understand. EGR, I understand. Again, EGR, there's many questions also that I have a gold deposited in Delhi vault, converted into EGR. Someone in Chennai wants to exchange it. Now, in exchange, he's getting what? Is he getting a LBMA accredited bar, or is he getting an India good delivery bar, or is he getting a Dubai good delivery bar? I mean, these are the questions that needs to be answered. I mean, regulations are changing on a daily basis. So will agree that LBMA have, put a restriction on touching any other than a LBMA bar. So what happens tomorrow if I get a non-LBMA bar? I mean, I cannot touch it. So these are issues. I mean, I'm not saying that, it cannot be addressed. The point is, we have been talking something initially, we are changing course in between, and then these issues are getting added to these things. So I think if something has to be done, I think everyone who is involved in this should be sitting together and doing it as of today. 4 years have already passed talking about spot exchange. I don't know how long. I'm not against having a spot exchange, please. But these are the issues that needs to be addressed.
Thank you, Reina, for raising some existential questions on the spot exchange itself. I think IGPC, when we started out, we had an early report on viability of a gold spot exchange, and I was partly involved in it. Now that he has raised these questions, what are we addressing, how are we addressing, which are clearly existential. Let me go back to Shivanshu, Gaurav, and Ranjit, in terms of what is their response to comments that had been raised by Mr. Reina. Starting with Shivanshu.
Yeah, thanks. No, I mean, it's an unfolding landscape, so the questions are all valid, you see. As far as the product features are concerned, there is ample latitude available in the framework which has been announced to create various products. And Ranjit has already mentioned about products aimed at accumulation. There was a thought process around that also, that in the meetings held on the product design working group, with SEBI, that whether we should allow 1:10, infinitesimal, finite times, breaking it into parts for accumulation, or shall we be totally, much more than that? So practicality has to be there, number one. And I think the most important thing is what Professor Saab, you have said some time back, liquidity begets liquidity. So today we are starting this product from scratch, and for it to become liquid, it has to be attractive to B2B also. It is essentially a B2C product, I understand. It's an accumulation type of retail product. But then the nature of the industry is such that firstly, gold is canalized into India. Then there are large bullion traders to whom I feel any product must make sense for initial liquidity. Then come the jewelers. So this product, is it competing with jewelers or no? Is it going to help or intersperse itself with the business models of organized jewelers, like you said? So these are some of the questions, but nonetheless, it has the potential. And I think these answers we will provide to Mr. Raina as we go ahead and launch it in due course of time. But to begin with, his questions are okay, quite valid. But just like any other contract that we have seen 1 gram gold contract successful. We launched the first one ever in the world, deliverable, 1 gram. We have seen all types of smaller retail contracts successful. Even though they are futures contracts, we are seeing tremendous delivery in them. So that says that if it becomes a T+1 subject, then will it lead to more deliveries in the same product denominations? Why do we need to reinvent too much? Because those are proven successful contract specs. So I would say that we will remain open to launching all types of such products. And this is a sort of broad contour to answer to Mr. Vipin Raina, that wherever they are participating today, the same thing in a spot fashion. Instead of going too much into further innovation on day one. I think that should work.
Yeah. Mr. Gaurav?
So I think in any debate, it is always better that someone has a counter view. So 4 of us were on one side, and definitely is given a views which are and points which are very, very valid. See, conceptually, if you ask me if I invest into gold, I always say, is it a Kalyan Jewellers gold or it is XY? See, my trust in gold comes from whom I am buying as an Indian, right? So gold as a product has a lot of emotions which are attached as a product. Okay, and those emotions, if you are trying to bring it onto a platform which is a very standardized platform. See, we need to understand exchange platform. What is the strength of an exchange platform? The exchange platform strength is to have a standardized contract, which is making common sense to maximum. I'll not put a number 70%, 80%, to the maximum participants, and those participants could be individual, it could be B2B, whichever way it is, could be investors, it could be speculators, it could be hedgers, whichever way it is. So that is very important. So exchange can only bring a specific contract which is transparent, the price discovery is there, and unless until price discovery also would depend on the liquidity of the contract. So my prima facie, if you ask me, whoever is going to come and invest into EGR, like say someone invests into sovereign gold bond, they know that it is being offered by RBI. RBI is backing it. So somewhere those communications also needs to reach out. We may all have to work as exchange also, because finally, end of the day, the product which we are all going to promote with our intermediaries needs to be backed by a trust which is in the regulatory framework, which as an end investor, he can trust, and he can put us almost on the same par as, because there is an emotional attachment for his purchase of, whichever gold he buys. But all said and done, it is definitely a product which is not existing now. The investment into gold is from, I don't know from how many years. So we are trying to solve too many problems here, right? Some of them may get resolved. So the government wants, people should not hold gold in a physical form, or they should be more in digital form. Some of them who are already holding physical gold can actually come and get converted into EGR so that the imports are lesser. So there are definitely problems which needs to be addressed in a structured manner. Whether EGR, you may have to give some time, because there are definitely a lot of participants, and unless until bullion guys, physical players don't support this initiative, definitely it will, because they are the one who are have to be on the seller side, because they have to convert the initial physical gold into EGR and then put it onto the exchange platform. So they need to be convinced, and there has to be, as Mr. Ashok Gautam also mentioned, and I totally agree, is there has to be economic sense in whatever product which we offer, both from the issuer side as well as from the investor side.
Now that we have progressed so much on the skepticism versus optimism debate, Let me quickly change the track and ask both Mr. Ranjit and Mr. Ashok just one last round. Like, is there a clear roadmap in dealing with those challenges? If there is a roadmap for anyone, what is that? What is that roadmap? Can you quickly respond? Yeah, he would prefer you to respond.
Okay, thank you, thank you. So we had a pact, if any difficult question is there, he'll direct to me. Okay. Okay, obviously, the roadmap is there, definitely, and I thank Vipin for the points which he has raised, and in fact, I keep, shouting from the rooftop. I keep going, whichever seminar I go, whichever webinar I go, whichever TV interview I give, I make one point very clear. This exchange is for the market. We will run this exchange the way market wants it to be run. Whatever products they want, we will launch it. We'll also tell them these are the new things which they should look at. If they find it acceptable, certainly that product will continue. So now coming back to the roadmap, obviously, so I did talk about the qualified jewelers, how they will be coming, and I don't want to get into the debate of the transparency, but certainly I will get into the debate of a democratic right of a 1 kilogram buyer versus a democratic right against a 100 kilogram buyer. That's where the OTC and the exchange will have a difference. So that cannot be challenged because if the price is available up to 100 kg for a particular 1995 1 kg, if Ashok Gautam is going and bidding for 1 kg, though I can't bid, I don't have that much. So, but even if I go and bid for 1 kg, I'll get the same price. That is a democratic way. Now, transparency means I can see that price. It's not that on phone somebody is quoting me. See, in each Sarrafa bazaar, there is a price. And I know for sure, people are here from the market, there are 2 or 3 top jewelers who set up the price for that Sarrafa. They say, is Sarrafe ka, this is the buying price, this is the selling price. In that Sarrafa bazaar, everybody will follow it. Is that a transparent price? I don't know, but that is the price. So I always believe, what is the price? Price is a transaction on which the last transaction has taken place is the price. After that, is it only indicated bid and offer? If it matches, then that is the price for that moment. So price is, I can have a debate with anyone on this price part. But transparency and democratic piece, which is I have already explained, that is what exchange which we are trying to do. Roadmap is very clear. Qualified jewelers which have been permitted, so there is a decentralization. So DGFT is permitted, government is permitted, Reserve Bank of India has enabled. They are now in a position to import it directly. So roadmap is how do we facilitate. There's a question again about delivery. Let me tell you, our chairperson mentioned about a date which was 11th October when we demonstrated the same day the gold could go out. We are working on a capability where within 4 hours of the dollar-rupee conversion, the BDR will be credited to the account if the trade happens. We are also working with our regulator, and we have already got the approval from various ministries that in any of the SEZs, if we see demand, there can be a IFSC approved empaneled vault which will have the IIBX gold. So any gold which is there can be traded in the form of BDR here, and delivery will happen from those. See, ultimately, it's a very large, geographically, it's a very large country. So the point was, he mentioned about, so today I have vaults in Gift City, but we are very mindful that we need to have vaults at across, at least 4 more locations so that we are geographically near. And so that people have confidence, yes, if they want, they can get it by the end of the day, and they can get the price. So another roadmap, let me tell you very clearly, is what we are working on is to make gold available to the exporters of jewelry. And that is one of the stated missions, and we are just working on it. I just went to, in break to DGFT to, have a word with them. And that's something which we are going on. Third thing is, he did talk about SLB, but let me make it, and this point was made by the chairperson also. We are working with the regulator where we will be able to provide a gold metal loan. That's again the roadmap. And it will be again transparent, bid ask, where they will be able to meet on their own. I am not getting into the other addressable markets. I am only talking about these markets. Next is obviously the ICE gate. Once the ICE gate comes, whatever scripts are available where you take the duty advantages at DTA custom centers, you will be able to take at our SEZ centers. I think this is again, we'll connect all the roads to that highway. After that, we'll request you to kindly use that highway, because I know for sure, even if a new highway is connected, there is an economy which is going on through the old highway, because the towns have come around that old highway. the business establishments have come around that whole highway, and that they will have their own view about it, about the new highway, which is just making the life easy. Another point I'll make. There is right now Ganges, Ganga ji beh rahi hai. Ganges is flowing. People can draw as much water as possible. That's what is the current market is. What we are trying to create is an artificial canal which will give you specified, purified, through that connectivity tap water at your doorstep. Now ultimately that canal is for everybody's good. But as long as the water flows there, whether the canal will be economically viable, effective, we all will see. But we are going to make all efforts towards it.
Thank you, Ashok, for laying the road ahead and ending up with the elixir of life, water. Many thanks for the insights you have brought. I also thank Shivanshu, Gaurav, Ranjit, and also Reina for pushing us back on the optimism that the exchanges have expressed. So
I have a question.
yeah, we will take 1 or 2 questions from the audience, max 2 questions, given the fact that we are late.
Anybody in the panelists can solve it. I just want to know, there are 7 lakh jewelers approximately. There's hardly a data which can prove. So do you think a UPI system could have worked if our Sabzi wala couldn't have accepted it? So the gold bond scheme, yesterday there was a customer in my store, I'm a retailer, just to disclose, and he had a gold bond of 2 kg, which he bought in during the COVID time. And yesterday he was in our store and he was one of my friend and he said, I want to buy a 100-gram set. Out of that 2 kg which I own, as a proud owner of a gold bond scheme of government, can't you redeem me? If I have a balance in my bank account, I can redeem even it to a Sabzi wala through a UPI. So unless and until you can redeem at these 7 lakh outlets, your product, any of your product, or I'm talking to everybody in the panel, everything that you are going to do is going to be a beautiful highway which nobody is going to use.
So that's, I'll take this because that's the point I made in the beginning. Once
So unless and until every 7 lakh jeweler or at least few lakh jewelers are registered on everything and everybody is accepting
So 7
your
lakh
product.
jewelers kindly have folios with any of these exchanges, and I am sure at some point of time all 3 of the exchanges will be talking to each other. I don't know at this point, but that is a good way to look at it because that is a connectivity. And then when I come to you so let's not talk about the sovereign gold bond because that's a different thing. No, because that's a different thing because there is a different debate. Let me tell you, sovereign gold bond is not backed by gold. Okay. So let's not get into that. Okay. So, but here the EGR is backed by gold. It is backed by gold. So, if I give the EGR and EGR is credited to your account then and there, so kindly, obviously, give the jewelry.
But what Mr. Singh told during his observation is that if as a jeweler I have to redeem it to someone who has bought on your exchange, then I need to have a gold which is already from you. So how would I get gold from you? Would you need a bank guarantee or what?
Any EGR which is holded, it is holded in the demat form. See, any beneficiary owner who wants to lend or who wants to give his gold to you, he can do offline transfer. Same happens in equity cash market.
So can there be a situation where on a retail store,
once you have
outside a retail store, there can be an outdoor which says, I accept a BSc gold EGR from you?
Sir, the writing is very clear on the wall. You will have to accept it because that is where it is all moving. So I will have these EGRs. I will come and say, please take this EGR, give me the jewelry. You will take the makeup charges.
I was in business when nobody accepted credit card as well someday. Back in jewelry business.
That is fine.
Today everybody
we all know that. We all know that.
Yeah.
That guy will give you in your demat account and then you can go to BSc and you can get it redeemed for physical gold.
Okay, thank you.
Last question, please.
Yeah, we are
It's
up
not a
for time.
question.
I'm sorry, we are up for time.
It's not a
Yeah.
question. It's just what I'm just going to add to what Ashok ji has said. It's about T+0 and T+2. See, currently what happens is, though internationally the gold is traded at T+2, most of the banking deliveries are happening on T+0 cash basis. And it's nothing but a function of contangos and lease rates for those 2 days. And what happens is none of the market players give that benefit of 2 days to any of the downstream buyers. Ideally, the T+0 rates should be lower than T+2, right? It's a cash market. So in exchange, it's going to be much more transparent. That's what, it's going to be
just to
that,
answer
those
that-
prices.
Just to answer that, we are very transparent. Today, when it is cash, it is more than the spot price. And when it was less than the spot price, we were passing on those prices to the customer. So it's up to the bank and to the traders who are doing this kind of a transaction, whether they want to pass on that benefit or not. Today, when we cut currencies, cash, if there is a discount, it's passed on to the customer. There's no point keeping it. That's where the transparency comes in. The customers are happy that what discount we got from the bank is passed on to the customer.
The point
Yeah.
is the standardization. A
Yeah.
company like yours might do it, others may not do it.
That's what I
People
mean.
may not even know it. In a exchange, what happens is everybody knows it. And even if I don't know, they can't take advantage of that. That's the.
No, that's fine. I mean, as I said, I am not against exchange. I am just, bringing out certain issues that, we see from our perspective.
Renaji, we are going to soon work together because there's something going to happen which will excite you when we talk.
We have to, sir.
Thank you
And
once
what-
again. Yeah, sorry.
Just one minute. On the exchange, the lending side on the EGR, how would be the lending rates be compared to the rupee lending rates? Because EGRs are going to be in rupees. Domestic market.
So it will be similar to the way you do it in equity cash markets, where you give your shares to the borrower at certain interest to it. See, interest will be driven by the market forces. We cannot say what will be the interest currently right now. So this is that.
No. Will it be a metal interest rate, metal related
So
interest
rupee
rates or
interest will be
rupee?
higher than the.
I know, but from the exchange perspective, if lending takes place on the exchange,
So gold, especially gold, the gold lending rate.
See, I think there are already futures contracts which are having a month-to-month differential, which is market discovered, right? Today we have a calendar spread. Sometimes cash and carry opportunities come, right? They provide ample, difference between the two. So I guess just like in the futures today, it is market-driven and market discovered. It may naturally so happen because this is just another expiry. It's a T0 versus a bi-monthly or a monthly.
So it is not taking care of the metal loan, which if you are referring to.
That
It is only the transaction which is happening in the exchange ecosystem, both on the future and the equity part, is what is going to happen.
It's like an interest, like a badla, what you call.
Metal loan will come up, sir.
That.
Thank you, panelists, for. Thank you.
I think I never thought that this session would be so engaging, and I wish we had 1 more hour to discuss.
Thank you, panelists, for the animated presentation and audience for the
We
spirited
need
questions.
this kind of
Thank you,
enthusiasm on the
Viklav.
platform also.
Thanks to the lovely audience.